Hi, this is Dan Harris, and welcome to the Ironbird Podcast. On today's episode, we have Paul Nolta. He's a managing director at J.P. Morgan Private Bank. He and his team focused on aircraft financing. Today's episode, we dive into the details of the Fed rate cut and what it means to aircraft financing. We have some comparisons to today's market to the 2007-2008 market, and we go into details of what J.P. Morgan is looking at when they're looking to finance aircraft on the good and bad side. I had a great conversation with Paul. I hope you enjoyed as well. All right, we'll jump right into, I think it's an interesting topic. Mm-hmm. It's with the looming federal funds rate cuts. You know, what have you seen with rate cuts? How does that affect the financial markets when it comes to borrowing for aircraft financing?
Yeah. Well, you know, J.P. Morgan's view and pretty much the market then is 100 basis points between now and the end of the year. September 16th, 18th, I think. First drop, probably 50 basis points with another 50 or 25. We're not sure the cadence, but they've definitely signaled that they're moving downward. So a lot of that already gets baked into, you know, the treasuries and baked into the cost of funds going forward. Mm-hmm. So, you know, unless you're floating, and a lot of guys went floating rate, you know, you're going to see that drip down 50 bips, 100 bips. You're going to get the benefit of that. But if you're looking to lock into a rate right now, it's probably already been baked into the cost of funds. Yeah, you know, maybe a little bit of a delta if you go farther out 5-7 years, which is sometimes where you want to be on an aircraft financing. But most of the time, you are going to see it baked in. Now, you know, as the year progresses, the elections, and it's funny, a lot of people want to look to the elections like, what's that going to do to the market? What's going to happen? And we've got all sorts of data that the market really kind of looks through that.
Nothing, right?
You know, it's kind of interesting that you would think. Same thing with wars. When the Ukraine and Russia thing broke out, people was like, oh my God, how's the market going to react? Unless it's oil-based or oil-focused, it really doesn't. Yeah. So, you know, that's another discussion, I guess, tactical if you want to make trades within the market and do some kind of a Trump trade was being talked about, things like that. But really when it comes to financing, a lot of it's already been baked in.
Yeah. How does, I guess then, that there isn't much of that trickle down then when these rate cuts happen? It's not a delay between the cuts and the different...
No, because the market's already going to anticipate what the yield curve looks like. You can look at the yield curve, that tells you what the market's pricing in, you know. And it's now, as far as activity in the space, I think they maybe get some people off the bench, right? Yeah. I mean, you know, financing at prime plus your shoe size, as they say, it gets a little expensive. Yeah. So nobody likes an 8% handle, right? When not that long ago, we were talking 4%, kind of all in. Yeah. So I think that gets people, it's going to breed activity. I mean, it's going to breed private equity activity, which obviously kind of goes hand in hand a lot with the aircraft space. Mm-hmm. It's going to hopefully breed some activity in the market, and that's a direct correlation. Obviously, the market does well, aircraft sales are up. I mean, it's 1-to-1 almost when you see that.
This episode is brought to you by Video Valet. If you care about having the best in-flight experience on your private flights, Video Valet offers up to 1.2 million movies, shows, magazines, and newspapers, all available on board without the need of expensive Wi-Fi or hardware. Eric and his team at Video Valet deliver fully customized iPads to ensure that your preferences are met on every single flight. Whether providing my kids with their favorite shows or allowing me and my wife to catch up on breaking news, I personally could never travel without it again. Video Valet is offering a special promotion to Ironbird Podcast listeners. Mention Ironbird, and Video Valet will add one free fully personalized iPad at no additional cost. Now, to the Ironbird Podcast. Are you structuring deals differently when the rates are kind of on the way down versus on the way up?
No, not so much. I mean, it's always a pass-through for us, right? Yeah. There's always a credit spread. Cost of funds is going to move, so the clients get the benefit of that. The delta, what their all-in rate is truly the credit risk on the deal. So that's going to be on a per-client basis. What's the balance sheet look like? What's the structure of the deal? Comfortable with repayment, all that kind of goes with it. So that delta you're going to see depends on each client.
What have you seen historically? Say you want to compare this to other markets that are now on the downward trend. Mm-hmm. How long have you seen that downward trend move? So if I know you don't want to try and catch that dropping knife, right? Yeah. But historically, what have you seen of the length of the downward trend before you start to see maybe these values come back up?
Yeah. I mean, the biggest one was 07, 08, right? I mean, we talked about that just a little bit. I mean, just to kind of give you context of what was going on back then. I mean, when we were doing aircraft deals back then, it was not unlikely to do 110% of the cost of the airplane. I mean, you look back now, like it seems like a bubble. It's like the
Yeah.
dumbest thing you could ever do. $40 million jet, you're giving the guy $45 million, basically. But if you want to finance jets, that's kind of where you had to be. So it got to that point, and then one step further, other institutions started doing, we never got there, doing non-recourse. A lot of real estate guys hold their companies, hold their assets in LLC. If things go sideways, they throw the keys back, and that's it. We never got there. That's when you knew the end was coming. And on top of that, what really fueled that, then I had a client who was in on a G5. He had a 4-year build out. Keep in mind, so the inventory was tough. You put your $10 million down. We'll call you in 4 years when it delivers. You know, we'll call you in 2 years. Say we put the wings on.
Yeah.
You owe us another $10 million. Whatever. Yeah. So you had so much liquidity, and it was Russia was the big thing. That Russia would come in. I had a client. They said it was $40 million in on a G5, but it only had to put down $15 million. Somebody came in. It was actually a U.S. based guy, movie guy, came in, offered him $30 million upside. So this guy made $30 million just giving his place out of line because he was the next guy up.
Wow.
These green deliveries were coming in. So that's when Gulfstream and all the ones saying you can't sell your place in line because they're cannibalizing their sales. So people are forming LLCs to hold the purchase agreement. Then they sell the LLC.
Yep.
All that stuff was going on, right? So world came to an end then. And it's a long way to get to your question. Everything got so inflated because people didn't want to wait. So stuff that never should have been selling for what it was selling for on the used market was just getting inflated. So when the music stopped and the world came to an end, you had all this inventory that just had to, somebody had to take a hit on.
Yep.
And it wasn't just the new stuff. It was the 5-6-year-old stuff that people, hey, I got money. I want to buy a plane. I don't want to wait 4 years. What's out in the market? That one sounds good. What do I have to pay? Okay, offer 20% more.
Yeah.
So, I mean, so to answer your question, that was hopefully the last time we ever see something like that. But that was probably an 8-year cycle before we burned through all that inventory and got through it, and all the whitetails that were out there that just couldn't get sold. So, aircraft is, well, what you also saw as a result of that too was the leasing. You don't see many institutions doing true leases anymore, where at the end of 5 years, you can throw back the keys and say, here's your plane back. It used to be a great model. A lot of institutions did well. You put a residual at 10%, you're able to sell for 20%. That juices your return pretty good. But just not many people take that risk anymore.
Yeah. Well, I've seen clients when they're considering fractional providers, Netjets, FlexJet. I've seen some people shy away from the actual fractional purchase and more into the lease because there's just such a big question mark on what that value will be at the end of your term.
Yeah. No, that's really what you're doing on the lease. It's who's going to take the end risk.
Yep.
And banks got away from it.
Yeah.
Few still do it. I think banks pull too far away.
Yeah.
And there's probably a middle ground.
Yeah.
I mean, for J.P. Morgan, I know our response was there was we really got tight. We just said, look, anything outside of this time frame, we're not going to do. It's got to be less than 5 years. It's got to be this, and this. And I think that sometimes you get a little too conservative on that, and it's swung a little bit too much the other way. So there are some opportunities now, but you got to be careful. But no, to your point, Dan, it's like, who wants to take the risk of this? I mean, there is also the other piece of it. Do you need the depreciation? That's because economics work out better. If you're in a position where you don't need the depreciation, you can give the depreciation to someone who needs it in return for a lower rate.
Yeah.
So there's always that factor. But yeah, nobody wants to get stuck with a 15-year-old jet.
Do you think that the ramp up to COVID was so fast and values climbed so fast, where the 07, 08 ramp down was a longer tail, that 8 years tail? Do you see this potentially maybe a shorter tail, this ramp down?
Yeah, because I think there's guys making more meaningful money, right? I think there was a lot of guys that were faking it, and it was all built on a house of cards, and we saw that once again the music stopped.
Yeah.
So I think there's definitely more guys that are actually with the venture capital, which is where I see a lot of it. I see a lot of private equity guys.
Yep.
Makes up a big part of my clientele. And they think, and George Rice and Joe Parker, I know you've had Joe on the podcast before, and he's great at BizJet because a lot of these guys say, hey, I just made $30 million. I'm going to go buy a jet and offset all this with the depreciation. It's going to be great. It's going to be
and charter.
Charter.
Yeah.
I'm actually going to make money on this.
Yeah.
And Joe has to give him a little bit of come to Jesus. Like, okay, wait, it doesn't work that way. You got to make sure you dot all your I's and cross all your T's. So there's some of that, going on that maybe it's inflating it like as a way to really kind of cover some depreciation or cover some gains. But I don't think we're going to see like an 07, 08 because it was just too infiltrated.
Well, there's there was definitely the way I saw it, and as the charter market got super hot, it made a lot. You could make a business out of buying an airplane, financing an airplane, and still having money left over, which is tough, very difficult to do.
Yeah.
But with charter rates on the way down, charter demand on the way down, which is driving rates on the way down, now those numbers get a lot more difficult, especially if you were financing an airplane as the back half of COVID, as those rates started to creep up.
Yeah.
When you're financing the airplane at 5-6%, it's a lot different than those 3 or 4% financing numbers.
Yep.
I'm expecting those airplanes to eventually get to a point where the rates aren't going to sustain what it costs to operate that airplane. They have to move those airplanes back into the used market. And then that's going to push more inventory up, push pricing down. And then eventually that flips, right? As the inventory comes up, the pricing gets down to a point, at least from the charter side, that the pricing will get down to a point where, okay, I can now purchase this airplane in the charter market. Rates can almost sustain a profitable margin.
It starts over again.
Exactly. Yep. And then it kind of boosts. But I'm wondering if it was, an 8-year cycle before, maybe this is closer to a 3 or 4 year cycle. We'll see this kind of swing, but you never really know, right?
No, and a lot of it, is fueled. It's your point. It's the same thing with the charter. It's the same thing with on the private equity side, where the cost of funds come low enough. Well, then the deal now makes sense to purchase for X amount. Your cost of funds are this, and therefore you can still make money and hopefully flip this thing in 4 or 5 years.
Yeah,
it's the same dynamic. So I think with the trend, it is going to help things out. I mean, the biggest concern, I think you saw it in the market about 3 weeks ago, when things went sideways quickly for a couple days because we got an inflation print that was good.
Yeah.
But the other print we got was an unemployment print that was kind of creeping up. So people thought, and this is the biggest concern, it's been the biggest concern in the last 2 years, did the Fed miss the soft landing? And are we in a tailspin? And this is just the first indication that no matter what they do, we're already spinning, right? Yeah. I think cooler heads prevailed on that. But to your point, I think you're going to see the lower rates as things get down. It's just going to fuel everything that much better.
Yeah.
Private equity market's better. The stock market should get a little bit better. And then I think, with that becomes, things start making sense for people again.
Yeah. In the end, if you need an airplane, right, you're gonna buy an airplane.
And once you do, you're not going back to 23F.
Yeah.
Once you go private, you're not going back to 14D.
Yeah. And could you wait 6 months, a year? Yeah, and prices might be better, yes, but you're not going to have an airplane.
Yeah.
You're going to be, either flying charter or another solution if you want an airplane, you just buy that airplane. Those values are, although they go up or down, mostly down, they're going to even out in the long run. So it's if you need that airplane, and another big thing we see is that end of the year tax push, right?
Yeah.
From your perspective, when you are setting up financing for purchases, how much lead time should people look at before they get to that end of the year tax push to try and sneak that deal in before the end of the year?
No, it's a great question. And you always say it's the flaming chicken, right? You never want to get the flaming chicken in your lap. And you're like, what do I do with this? And it's too late. And you're trying to help a client. I think hopefully they've got a relationship with an institution that can handle this kind of financing and knows how to do it. And we've turned deals as quickly as 30 days. I mean, there's certain things with the pre-buy and stuff that they have to go through their process. But usually within 45 days, it's if everyone's motivated, I think you can easily get that done. I mean, the biggest thing I always hear is, people talk about, do you have aviation counsel? Like, no, you know what? I got my real estate guy. He's really good. He's been with me for years. You're just like, oh my God, this is going to go sideways.
Yeah.
Right. So you got to have the whole team aligned, and you really need true aviation counsel. And I know it can get expensive and people want to do it as quickly as possible, but that really helps the deal flow better. So 45 days to 60 days is probably always good.
Yeah. So you got to get your tax planning done pretty soon to hopefully not see that big tax bill.
Exactly.
Going back to inventory levels, with Gulfstream hoping to deliver 50 G700s here in Q4 per your report.
Yeah.
What do you think that's going to do to some of these other inventory and pricing levels, to the 650s, to the G550s of theoretically most people tend to stay within the same manufacturer, especially when buying new.
Yeah.
How much you think that affects some of these inventory levels and how bad is that going to hurt pricing on some of these airplanes?
I remember when the 650 came out years ago and everybody was, falling over themselves to get to the 650, but then some guys took the approach, which I kind of like. I think you see not any differently than a new car. Let's see what this thing does.
Yeah.
I'm always shocked. It's funny because I'm not, I finance them, but I'm not an aircraft geek by any means. And I'm not one of those guys that can sit on the tarmac and point out what serial number that is and tail numbers and stuff. But I always am surprised that it's just so niche oriented. Like the 700 to a 650, it's like, is there really that much of a different client base that needs that much more range? Or but there is, you know. So I it's not like people. Yeah, you get a few guys that saying, hey, the 700's coming out. Maybe I'm gonna hold off on the 650 because that's the newer, shinier thing. And you got those guys that always want the newer, shinier thing. Then you got guys that just need lift, and this is their flight profile, and this is how many people they're going to be taking, and the 650 does the job, and that's fine. So it'll be interesting to see. I mean, I've seen it. I've walked through it. It's meaningful. I mean, it's a big boy plane. Not that the 650 is not, but it has presence. Yeah. There's no doubt about it. Yeah. You know, I think that's going to appeal to a lot of people. But I don't think... You know, the problem, again, I go back to 06, 07, just because it was 708, just because it was so painful. It was the long wait. It was just, we had so much money chasing too few jets. Yeah. And to get that new jet was a 4-year wait. Yeah. And I think that's kind of balanced out.
Yeah, now it's 1 to 2 years on most airplanes.
So it takes a little bit of the pressure off. So I don't think we're going to see, to answer your question, I don't think we're going to see that run up too bad.
That's interesting. So. Okay. Now, with a lot of different financial institutions that are offering lending opportunities. Yeah. Yeah, how should a borrower approach that process of figuring out what the best, you know, institution or person to, you know, help me purchase this airplane? Yeah. How would you suggest someone approaches that?
Well, I think it's a good question. I mean, there's a lot of things out there. There's different approaches you kind of get into the nitty gritty. I can speak to how J.P. Morgan does it. A lot of folks think, hey, I need a 20-year amort, right? It's a $20 million plane. I want to do a 5-year deal. Right? You're always going to be a 5 or 7, right? Yeah. That's pretty much market. Yeah. And like I said, we're talking loans. We're not talking leases because that's pretty much 90% of what's getting done right now. But a 5-7-year deal, they want a 20-year amort. So we kind of work it out differently. That gives you a 20-year amort at 5 years, gives you a certain kind of balloon, whatever that balloon is. Yep. How we approach it is we'd look to what's the vintage of the aircraft, how many hours. We project out what we think the value of that plane is going to be in 5 years, and then that backfills whatever the amortization is. Yep. So if it's a $20 million jet in 5 years, we think it's going to be worth 14. That's your balloon. Yep. We kind of ignore the amortization. That's kind of amortization is what it is, but we're going based more on the value and then back into it. So that's one thing. Then some banks have gone whatever the amortization is, but they want a true up every year. So the true up meaning you got to keep us within 80% fair market value every year
of the aircraft
So we're going to get it audited at the bank's discretion. So maybe they feel comfortable and don't want to waste the time. They know they're okay or the credit's fine, but they have the right to get it appraised every year. And if you come in at 75%, you got to shore up that 5% and get them to 80.
Interesting.
So that's something you want to think and look into. And there's another institution out there offering the 60-40, non-recourse. You put 40% down, they'll finance 60% of it, and you get it non-recourse. Things go sideways, you can throw the keys to it, and that's it. Sometimes that appeals to people. But that also has tax consequences because you can't get 100% depreciation. You can only get depreciation of what skin in the game that you have.
Interesting.
So it's really kind of the devil's in the details on some of that. I mean, from a 30,000-foot view, everyone kind of looks the same. Again, it's a 5-7-year deal. It's a balloon. Balloon's going to affect your payment, so obviously that's important to people. It is hard, as much as we try to non-commoditize lending on that, right? Everyone's money is just as green as everybody else's. So it really comes down to execution. Who has expertise in this to get this done? That's huge. And then, rate, obviously, you're never going to get around that. But you may want to look to pay another 25, 30 basis points if it's you got surety of execution. Yep. And the third part of it is what's that payment look like? And the payments are going to be driven by the balloon.
When someone's looking at 5 to 7, what's that decision process? Does it just come down to payment amount?
Payment amount. Some guys maybe they try to think of how long I'm going to be in this aircraft, right? And that's why some guys truly like leasing too. It's not any different than a car. They want something new every 3 to 5 years. Yeah. But is this going to get me where I want to go? What's the OEM coming out with in 5 years? Is this going to bridge me to the next new shiny thing?
What about guys after 5 years that say, you know what, I really like this airplane? Yeah. Would they go and just refinance it? What would they do?
Most of the time they do. They have to. I mean, they got a balloon that they're on the hook for. Yeah. So we come to them obviously 6 months ahead of time. So, okay, what are you thinking?
Yeah.
You know, this $10 million loan's now $5 million coming due.
Yeah. What do you want to
And
do?
hopefully we're in a position in the bank, and that kind of goes back to our previous topic there too. You want to make sure that you got people that understand this business.
Yeah.
Last thing you want is a guy in 5 years, you got to refi, and they say, sorry, we're out of this business. You need to go find a home with this thing.
Yeah.
I mean, the idea is hopefully your aircraft guy's your aircraft guy, and they're kind of giving you good guidance and good advice. But yeah, you know, and that's all going to be value driven. You know, hopefully at the end of 5 years, an example we're talking about, whatever the balloon might be, hopefully that plane supports it. We're in a lease, that would be the bank's problem, but in a loan, that's the client's issue.
Yeah.
They got to make that good.
When clients are looking at choosing a financial partner, going, you know, direct to an institution versus maybe a broker, where do you see the pros and cons to the different approaches?
I think it's really, do you have a relationship? And I'll be honest, we you know, if a guy's buying a $40 million jet and he's not a client of J.P. Morgan, it's probably somebody we really want to get to know. But is that something we're going to jump into and lead with our balance sheet? Probably not.
Yeah.
That's just hard. So I think if you've got an established relationship, and I would advise people, if you are looking at that kind of an aircraft, you probably are dealing with a significant financial institution that can entertain this for you.
Yeah.
And it's always best to go direct and give you advice on that. You know, the broker model, it comes back to execution, you know, and there's other things too. We talked a little bit about, you know, documentation. Are they outsourcing their documentation to somebody else? Because you're going to pay that cost. You know, for J.P. Morgan, I can speak to, we got in-house documents. It's in-house counsel. It's kind of standard documents. We'll negotiate a little bit on that, but usually it's pretty straightforward, and that saves time and money as well.
Now, do you often see the brokers on a different segment of the market, maybe the under 5 million type of segment?
Much so. Yeah.
And is that just because institutions like J.P. Morgan usually are focusing on like larger segments, and what segments do you think, you know, what do you see J.P. Morgan as, you know, focusing on in the space?
Yeah, and really it's a service we provide to our clients. Where I know other institutions have an aircraft group, and they've got to grow that aircraft group, and it's a standalone business. So I think that affects how far down you'll go down market. I mean, we still have our preferences of manufacturers and years and models. You know, we're not as strict as we were when everything went sideways, but we're starting to expand that a little bit. But we still have a little bit of that discipline in there. So, but to answer your question, $5 million and less, it's just a much more. Well, there's just more there.
Yeah.
There's more deals to be found. There's more institutions that will do that on a one-off. So you see,
it's usually a lot more work though to confirm. Values are probably a lot tougher.
Yep.
When you're looking at a 5-year-old Gulfstream, you pretty much know the values.
We've got a team that's exactly what they do. That's how we throw our balloon. To your point, we know how has this plane reacted.
Yeah.
Or, you know, how has it kept its value over X amount of years, and from that we can usually project out pretty well.
But when you're looking at 25, 30-year-old airplanes, there's a lot of things you can find in those airplanes, or they've potentially been at different owners, different countries, different books. So a lot more questions in that space.
And the maintenance program, you know, that's one thing we talked a little bit about that. I mean, we do kind of require that. We require that the planes be on a maintenance program, that they pay into that. So if there is a time where we have to take it back, we know at least the aircraft's been taken care for.
It just lowers the risk from a financial institution.
Exactly. We don't want to be in the business of owning aircraft. That's for sure.
It's interesting because I've got a lot of people that are in the business of owning airplanes to be profitable, and a lot of them see that, you know, from a financial standpoint, they $5 million or less airplane.
Yeah.
That they can run 600 plus hours a year, that are not on engine programs.
Yeah.
They're basically going to run this airplane
till the wheels fall off.
Till the wheels fall off. And then they'll part it out, and then they'll buy another one, and they'll do this again.
Yeah.
And they can make a business out of that.
Yeah.
That's probably not the business J.P. Morgan wants to be
exactly.
in.
No. That's not profitable. It's just we're just probably too big to do that. And again, we're here more for to serve our clients, or our clients that are asking for that. So we're obviously not going to engage on that. But there is, I mean, there's definitely a place for it.
How often are you seeing clients move away from their main financial institution to get aircraft financing?
Yeah, it's a good question. Sometimes, you know, they just don't have it, right? And so you kind of have to go outside.
Yeah.
But most of them do. Not all of them do it as well as I think certain ones. There's probably 2 or 3 in my mind that kind of are good on the edge on the execution of it. But a lot of them will try to do it like in a non-aircraft way. So if an individual has $50 million with a company, you can always margin that, probably cheaper than you can on an aircraft. You don't have to worry about taking a lien on the aircraft. You maybe do it as a abundance of caution, as they call it.
Yep.
But your comfort, it's a lot quicker that way too. So a lot of them will try to steer it that way. Say, look, you've got $50 million with us. You want to buy a $20 million jet? We get it. Let's get you an advance against your line of credit against your assets, But then you got. It's not always the best thing to do because you always want to line up long-term assets with long-term liabilities, and there you got a short-term liability with a long-term asset. So margin call. It's kind of hard to liquidate a jet to make up on your margin call. So
yeah,
but people will do that. But getting enticed by the price. It is significantly cheaper, significantly easier. So I think that appeals to them. That's where people try to, I think, put a round peg in a square hole if they don't have an aircraft team.
I'm assuming they do it at larger percentages of the value of the asset versus value of your total assets.
Exactly.
They try and look to minimize that as much as possible.
Yeah.
You talked about engine programs as one of the things that J.P. Morgan requires when they're financing airplanes. What are some of the other things that are requirements that you find in deals that, hey, here's some of the things we have to have or we're looking for when we're looking to finance airplanes?
Yeah, it's, there's kind of the cookie cutter stuff. You're going to limit hours to a degree. I mean, they get more, again, on a lease, it's obviously much more crucial. But, hours like to see at 250 to 300. We don't particularly like charter. We'll limit charter.
Smart.
Yeah. I mean, because that's more of a business. You know what I mean? It's not an add-on to a client. If it's a charter business, that's great. There's a space for that, but then we just don't lend into that space because again, on the private bank side, it's two lead individuals who we're going for.
Yeah.
But and then out of the country usage can sometimes get a little bit. I was talking to a friend of mine who, on the commercial jet side, with Jet Capital, and he was talking about all the Russian planes they got over there that they ain't getting back.
Really,
and that's a whole. The insurance game on that whole thing. And that's exactly why you limit stuff going to outside the country. Now, can you control it? No.
Yeah.
But you don't have much of a hammer, really. They always say all these coverage you put in place, it's always going to be payment default. You're not going to go in front of a judge and say, why are we here? Well, because he flew it more than 300 hours. Like, were you getting paid? Yeah, he's getting paid. Well, then what are you doing here?
Yeah.
Right? So all those covenants do is just kind of get you back to the table and say, hey, look, this isn't what we agreed to.
Let's renegotiate.
Yeah, exactly.
What are some of the other things that when you're customizing, your financial structures for these loans or leases, what are the levers that you tend to kind of move around to try and structure the deal correctly for clients?
Yeah, there's a lot of different things. I mean, if there's a shortfall, maybe on the collateral side of it, we need to bridge something. We could always do. Hey, we just got to have visibility that you have X amount with us. And we don't take a lien on that, but we just want to maybe be able to see that you have the capability. So that's one way.
Yep.
And that goes back to relationship, which goes back to you want to deal with an institution that knows you, that you truly have a relationship for. I know it's easy to make these things into a commodity, but the analogy is always your mortgage. If you really like your mortgage guy, you're going to pay 30 bips more. It's like, no, you're going to do your mortgage, you're going to put it on the shelf and not think about it. But there's little things on the aircraft space like that people can kind of work with you. In that we see a lot of we want to sure you maintain liquidity is the biggest thing on us because we're again dealing with two-legged individuals.
Have you started relationships where someone came from outside the bank, had a great process with you and your team, and then moved more funds into the bank?
Yeah, I mean that's a great win, right? When you try to show people kind of the value add you can bring to the table and you get to execute. And trust me, we've had one where we've dropped the ball and it's gone the other way, unfortunately. But yeah, I mean, ideally, that's what you want to do is show people kind of what you can do and what institution can do. And that's not making a commercial for J.P. Morgan, but that's where we're very good at what we do is handling very high net worth individuals and kind of dealing with them on all fronts. I mean, people like to look at me like, oh, you're just a money manager. I mean, no. We handle all, I'm the one that gets the phone call when the guy's in Italy and the plane's not working or whatever's going on. You know what I mean? So it's a lot more than just that.
One of the things when we talked about kind of the things that J.P. Morgan is looking at when airplanes, you talked about international travel, but what about purchasing international airplanes?
Yeah, we do have a piece. We have a group outside that looks at that because that's a unique animal, obviously.
Yeah.
from registration and everything like that. I mean, I know here if it's not N registered, we're gonna have some pause. But we're very active. Very active on the international side. There's another group that kind of runs that, and that's a little bit more consolidated. I think in London is where a lot of that's housed.
Any places when you see someone brings you an airplane from this country, you're like, ooh.
Well, yeah, there's some of the obvious ones, right? Some in the Middle East are kind of right now just give us pause, and not from political perspective. It's just, well, how do you get comfortable that you truly have a good lean on the aircraft? That's always the biggest thing. It's like, is it a country that we can take a lean on and we can get access to it if things go sideways? And that's usually, again, it's not a political thing. It's more just the infrastructure's not there.
Can I come take this airplane, right?
If we show up saying, hey, like the Russia example, right?
This is my airplane. They're going to say,
there's nothing you can do.
Yeah.
So that's the only thing, is just making sure that we can get access to it.
Is that when you're looking at mitigating risk, is that the biggest risk? What are some of the other risks that one, you need to go, and if something happens with a loan, you need to take this airplane back? Can you do that? What are some of the other risks that you see when you're looking at deals that say, oh, this has too much risk involved in it?
Yeah. I mean, we're always going to look at things as and again,
total assets.
We're always going to look at it from prepayment, right?
Yep.
Taking the airplane is always secondary form of repayment. So we try to always just do the underwriting, the due diligence on the individuals. Does he have the capability? Do we have the relationship? And do we have the visibility that he's going to be able to pay this down over the next 5-7 years? Right. Yep. That's first and foremost. Second, when it comes to the airplane, I mean, the biggest thing you have with it is probably maintenance or taking care of it. Right. That's the last thing when things get tight. That's the last thing they're going to spend money on unless they have to. Right. The one difference, everyone says, well, you do yachts, do you do boats? And I'm like, well, no. And the reason we don't, and that airplanes have that boats don't, is you got to register everything for flights and whatnot. You can put a boat in the middle of the Pacific if things are going sideways, and then say, I'll negotiate with you. I'll tell you where your boat is, but let's work out a new deal. And so that's really the biggest thing. So it's always got to be cash flow first. And again, they have that one group that's 60-40 that I mentioned to you, that they'll do that loan, that they figure, okay, if we got 40% equity in this thing and it goes sideways, we almost would want it back because we could probably sell it for more. Yeah. And that's a play. That's kind of goes back to the leasing aspect. There's a room in there somewhere, right? But yeah, I would say first and foremost is cash flow, repayment. Second is looking at the plane is our biggest risk, and just trying to tighten that up as much as we can on the maintenance side, on the charter usage, on the hours in general, right? He tells you 250 hours. And if he's running it hard, but that's why to get off that, they back to when we first started talking, the shore up thing. So, all right, if you're really going to run it hard and it's got hours on it, we're going to know that in a year, because the value's going to drop, and you're going to make up that difference anyways. Yeah. So that's the way people have gotten around it. Are
you guys keeping an eye, like tracking these airplanes as they're flying every year, or is this like end of the year? You kind of take a look at, all right, based on this loan, or the end of the first year of the loan, let me take a look at what this airplane actually did.
Yeah, it's more that. It's more like, okay, again, it'll probably be driven by the risk rating of the individual. Did he get notched down? Mm-hmm. And that's truly where the review comes from. We're going to review Bob Smith every year to renew his line or whatever. We're just kind of looking at things like, okay, Bob's no longer a 4, he's now a 5. Yep. Okay, let's not circle the wagons, but let's just do a check. All right, how's that airplane? Do we have value on that thing? Is that thing sideways? Exactly. Go through the checklist and make sure things are still on. So we don't look at it that much, and we haven't really, we'll bring it out if we need to. I know some institutions, as far as that shore up, that's kind of just a standard, because they don't want to get caught. That's an 2008 hangover, right? Like, we're not going to have that
caught with their pants down. Yeah,
exactly. So we don't typically use that. We may bring that out if a client wants something, and then, okay, that's going to give us more risk over here, but we can shore it up by doing this. So we don't have a system in place where we're looking at those, but we keep an eye, just like, the business jet monthly that we have. We got guys that are just constantly looking at it. So if we see an aircraft just take a hit for whatever reason, we'll go through the inventory and just make sure that we don't have issues. Yeah,
the 450 was one of those airplanes that took a little bit of a hit this year. Yeah. Where a situation where you had a couple people that had to get out, it drove down that cost.
Exactly.
Is that, we look at that and you're like, oh man, this market's really moving down. I got to take a look at all of my other 450s.
Well, keep in mind too, when it's a loan, you're on the hook anyway. There's not much you can do. If the guy's paying you, okay, you can set up a yellow flag, but unless you can't go to him and say, I think we're upside down. It's like, okay, well, that's not my problem.
Yeah.
I'm making payments and I'll make the payments up till year 5 and then we'll talk,
And then I'll sell the airplane for whatever it's worth.
Exactly. I'll make up the difference then, or maybe it comes back. I got 2 more years, I mean, banks are always going to be concerned about that, but what does the document say? What kind of leverage do you have? But sometimes you also just want to let him know, or, hey, looks like you're playing, and some know, some don't, right?
Yeah.
Some guys are into it and they love it. Other guys, it's like, hey, this is my tool that gets me from A to B, and
it's cost what it costs.
It costs what it costs, and I'm not looking to make an upside on this. It's a depreciating asset. I mean, that's the crazy thing, the mindset. I mean, now we're back to the point, and you mentioned it quickly, Dan, too, that it's an asset that depreciates. I mean, for a while there, it was like buy one and hold on to it, and you're going to sell it 3 years later, and you're going to make 20%. It's like. And again, that's the first sign of a bubble, right? When you start telling those kind of stories, you look back like, how did we not see that coming?
Yeah, which it won't happen again for 20, 40 years.
Who knows, right? When the next perfect storm is going to happen. I think banks are in a better position. They're well capitalized. In the aircraft, it was just kind of a confluence of a lot of things.
But it's crazy because airplanes have been, total inventory levels of airplanes have been going up, right?
Yeah.
Just like airplanes are operating longer than they ever have.
Yep.
So they consistently are putting out new airplanes. So the total inventory levels are going up because people are utilizing them. So theoretically, like that shouldn't happen where these airplanes are appreciating because the inventory is just continuously going up.
Yeah, exactly.
Where it's not shrinking, although it's still, the inventory levels are still somewhat tight in some markets, right?
Yep. But I think he had a lot of new money. He had a lot of Russian oligarchies going back. Like I said, it truly was the confluence of a lot of different things. And, you can make the argument again, too, with, a lot of the private equity guys. That's I don't know. I mean, you could talk to a lot of the brokers, and they would probably have a broader view of where they're getting it from or where they're seeing their deals. But I think they would echo the same thing. And so,
private equity is our biggest vertical when it comes to charter flying as well. And I think that mirrors pretty much.
Yeah.
Because private equity, it was real estate was a big one, but right now they're getting beat up a little bit.
Yeah.
So I've had a lot of people that are in the commercial space or the development space that are kind of pulling back a little bit.
Yep.
And actually, I had one client that was pretty close to signing a Netjets, and he didn't end up doing it. This was about a year and a half ago. He's probably pretty happy now that he didn't.
Yeah.
Because he'd be a year and a half into a 5-year contract.
Exactly.
Not utilizing an airplane right now. He pretty much went from flying 80 hours a year to 20.
Yeah. Yeah.
So that's actually one of the downsides of signing those longer term contracts. I guess buying an airplane too.
Yeah.
At least when you buy an airplane, you can sell it.
Yeah, and hopefully come out okay with it. Right?
Tough to sell a Netjet fraction.
Yeah.
Some of the in the financial markets, what are some of the trends you're seeing recently that you think people that are looking to buy an airplane over the next year should be kind of in tune to?
As far as just the financial markets in general, what's going on? I mean, like we talked about, there's no doubt the market goes up, jet sales go up. People feel wealthier and they think the party's never going to end. That's always gives you a little bit of pause.
It's funny. There's such a direct, tight correlation. I mean, when the markets took the blip, like it was silent, right?
Yeah.
And everyone's like, "Oh, I need to pull back."
Yeah.
And now with this quick recovery, it's like everyone's flying again.
They forget a month ago.
It's like,
happened,
exactly.
Right?
It's like,
no. And you get more guys that forget, the 07-08 time, which that kind of, that curbs behavior as well. Kind of what your experiences have been, and a lot of guys didn't, that was a bad experience, and so a lot of them don't want to go back into that. I think they've learned their lesson. They're never gonna own a plane again because it was just a bad experience from that. So you got those guys, but you're always, the indicator is always the market. If the market's ripping and it's doing well, it has such a domino effect on so many different things that you're always going to have it. And in a way, thank God. That's what keeps planes going and keeps money in motion, which is what I need, is what you need. Mm-hmm. And that's all you're looking to get done. Just be a part of that.
In a volatile market, what should people be doing with regards to financing? Should they try and lengthen? Should they shorten? What are some of the strategies in a tougher market?
I'd give advice to clients right now, if you can stomach it with a trend going downward, to float it.
Yeah.
float for a little while, because I think you're going to be cheaper now than you are, or put some optionality in there where you can refi or reprice in a year. There's always that, and hopefully their bankers tell them about that.
Yeah.
Because
instead of them waiting for the numbers to go down here in 6 months, just float it.
Just write it down.
Just let it, yeah.
If you got there's so many different things that go into consideration, right? How good of a deal is it on the plane? Does it make sense? So that's where, again, we could advise clients sometimes, you get a good deal, you get liquidity on your line against your margin loan, buy that. Let's take it down, get off the street. Not unlike a house.
Yeah.
Let's get it off the street, and then we'll put more permanent financing down the road, wherever it makes sense. So right now, I'm advising clients, both in the investment side, let's get into duration. Let's lock in longer on fixed income to where we can, because you're going to see rates that aren't going to be around for a while again, as the Fed starts this trend downward. So on the liability side, let's wait it out. Let's float that down. But on the asset side, let's lock into that yield and get some of that income now.
So you think it might be a great time to find a good airplane at a good price?
I think so, because I think, again, it's I don't know if it's ever going to get down to the crazy.
Yeah.
It was, and everyone benefited from that. If you owned a home, everyone's got a 3% mortgage now. But I think it's going to start making sense. Definitely going to start making sense. It's like a home, right? I'm sure even these things are millions of dollars on these aircraft. But like a client told me once, he never bought a home he could afford. And there's some truth to that, right? Same with an aircraft. You get into that, and then I think it's a good time to take that bet. At least it's like, God, it's going to be tight. Yeah, it might be tight for 6 months.
Yeah.
But
it's only going to get better.
It's only going to get better in the next couple of years.
Yeah.
This is Paul Nolta talking, not J.P. Morgan, or we get sued. But I'm just saying that's the way I think the trend's going.
For people that want to engage, J.P. Morgan and yourself, how do you start that conversation? Is it, hey, I've got this airplane, or is it, hey, I'm thinking about doing this?
Yeah, a lot of it's that. And I try to stay plugged into, like we talked about a little bit, it's a small world, and I try to just keep the dialogue going with some of the OEMs, some of the brokers, because I just want to know activity, just like they want to know activity, right? I mean, selfishly, OEMs don't care where they finance it, but they just want to know if there's a client that's maybe looking at getting a new plane, right? So maybe I can help them with that information, or just give them a heads up.
And there's terrible data of what deals are happening at what price. It's incredible.
There's no league table for who did the most corporate aircraft. Yeah. There's not. And so many of them are done just with clients that never make it out. But that's where I always find it's still just staying plugged into that network of, and we do the Business Jet Monthly. I send that out every month to 40 or 50 people.
Where do you get the data from?
So that's from the investment bank. So I can't take credit for either if it's good information or bad information, but it's a lot of information.
So if it was good, it was from you. If it was bad, it was them.
I turn it on those guys. I've had some people call me and say, this is wrong. I'm like, well, I don't know what to tell you. I just forwarded it to you. So I'll pass it on to the investment bank. So we do have a group that just follows the OEM. So they generate that kind of data.
Yeah.
And, anybody listening, happy to share that with them if they can contact me and add them to the list. It's good information. It is such a small network. The flow of information, to answer your question, is really kind of where I get most of them. And a lot of it is through bankers that I know. They may be calling guys selling his companies, coming in some money, wants to buy a jet. Can you help him walk through this?
Yeah.
The first thing I do is I call BizJet and CPAs and say, make sure this guy does this right or understands what he's getting into, because a lot of guys get to step 9 like, oh my God, this is really expensive.
Well, they look at they've got $50 million or $100 million or more, and they say, all right, I'm going to put $10 million. I'm going to buy this airplane.
Yeah.
But that $10 million, that's not it.
No,
there's a lot more than the $10 million.
And to your point, and as they peel that back, they're like, oh, this is expensive. And
it's tough because you've got people on the broker side, and there's a lot of great brokers out there, but there's plenty of not great brokers, right?
Sure.
I think that's probably one of the biggest question marks, and probably one of a really important decision is finding that great broker, along with a financial partner, a CPA, an attorney, that won't tell you the real details of what it costs.
Yeah.
Especially, like, I've seen airplane operators fudge the numbers a little bit, but I think whole aircraft brokers are probably the worst, because once the airplane's sold, they don't even have to deal with it anymore. At least the operator has to send you a bill every month and collect.
Yeah.
The whole aircraft broker is just like, it's the operator's problem now.
Yeah. No, I totally agree. And a lot of people don't consider that, And obviously, it's like they say, if you have to ask about the gas, you can't afford the Ferrari. But still, it is shocking, I think, to a lot of people. And then they kind of get some back into, okay, do I want to own? Do I want to charter?
Yeah.
what
That's
do
when
I
that
wanna
kind of
do?
decision matrix starts to kind of
in
clearly.
housing. I mean, look at with ACI and Clay Lacy taking over in Santa Ana. I mean, there's limited spots. So, that's the other thing. Do you want to send it to Long Beach and then you're going to debt it into Santa Ana and get picked up? I mean, it's like,
Yeah.
guys, I just want to fly to Aspen. I didn't want another headache.
I know, right? You have to make all these other decisions, and then that's where fractional becomes so great. It removes all those decisions and those headaches.
And everything says you got something there waiting for you.
You're going to pay a premium for it, but it's interesting. I based on this conversation, I feel like I should start a leasing company because there seems to be a small gap in the market there.
And I'm not saying there isn't leasing out there because there's a few that do it, but
they're big. Those are the
those
big.
are big, and the few that there that do it, the less aggressive I should say they can be on the residual because where else are they going to go? I mean, it's a great model. Again, you throw a dart, you think that you're still making interest off. The $20 million jet down to a $10 million residual. You're making interest on that $10 million as they repay you. But if you can take that $10 million and sell it for $12, that's $2 million to your bottom line. You run those numbers, that juices your returns from 6% to God knows what.
Yeah.
So I think there's a place there, but it's just once you take hits on that stuff and you have to explain that up in command, like, wait, why are we taking a $40 million hit?
Yeah. And they're big numbers and big assets.
And again, not to go back to 08 and when the world came to an end, but I mean, there was one major institution that they had a big lease portfolio and they should have been writing down their residual value because they knew they couldn't get that. But I think the reaction was, well, what if let's keep them leased?
Yeah.
Short-term leases. And then finally the Fed came in and said, you guys aren't a true operating company. You need to write these things down to what they are. You're not an operator of aircraft.
Yeah.
You lease aircraft, but you're not an operating company. And so they finally had to take a hit to $270, $300 million. And then how do you explain that up the chart to a guy, heading up a major bank? He's like, wait, why am I taking this hit? What did this group do?
Yeah.
Who was this?
Why didn't they write this down before?
Yeah. And it's it's a tough discussion to have. And so people shy away from it. But like we talked about, the cycles will come back. People will realize, like we're talking about, like, man, why is anybody doing leasing? Yeah, let's get into leasing. And 5 years later, you got a feeding frenzy and residuals are crazy and
maybe
I'll
start with like a Pilates.
Start
with a Pilates. Yeah. So anyone that needs 50 to 100 hours on a Pilates, we'll start selling.
I'm telling you, make it a 5-year deal and flip them.
Sounds like a great idea. I would love. Listen, personally, I would love a Pilates because it hits all my It hits. I got family in Napa and Tahoe, and I can fly out of Santa Monica right here.
Yeah, perfect. I can finance it for you. We'll be awesome. All set.
Paul, people that are interested in J.P. Morgan and financing, what's the best way to get in contact with you?
Probably, just hit my email. It's always easy. It's just paul.l.nolta, N-O-L-T-A, so paul.l.nolta@jpmorgan.com. So if you have interest, too, in this, my business jet monthly that I talk about, I say it's mine. It's not mine, but it's the institution puts it out. I'd be happy to put people on the list and see what I can do to help.
Awesome. And 45 to 60 days before you want to buy an airplane.
Yeah, don't give me the flaming chicken in the lap. Don't call me saying, hey, I'm financing a plane next week. That's not going to get done.
Awesome.
It's not going to be a good experience.
Fantastic. Paul, thanks for coming on. I really appreciate it. Hi, it's Dan Harris. I want to thank you for listening to the Ironbird Podcast. If you want to get in touch with Paul or anyone at J.P. Morgan or anyone here at Ironbird, you can always contact us at fly@flyironbird.com or go to our website, flyironbird.com. I really hope you enjoyed this conversation as much as I did. And if you're interested in leasing an airplane, you might have to contact me. We'll start a company. Thanks. Bye.